Hello and welcome back to another video. Today I'm going to be explaining in detail exactly how home loans work. By the end of this video you're going to understand exactly what a home loan is, what different types you can get, how you can qualify for it, as well as all the pros and cons that come with it. So make sure you watch this all the way to the end so you don't miss any important details. So to start with, what is a home loan? A home loan, also known as a mortgage, is a sum of money borrowed from a financial institution or a bank to purchase a house. When you buy a home, you'll put down a cash deposit of at least 5% on the property's price, and then pay the remainder using a mortgage from a bank or building society. You'll repay your mortgage in monthly instalments over a set period of time, for example 25, 30 or 35 years. Home loans consist of an adjustable or fixed interest rate and payment terms. It's basically a legal agreement in which a person borrows money to buy a property and pays back the money over a period of years. So what are the different types of home loans we can get? There are actually several different types of home loans, each with their own characteristics and benefits. Here are the most common ones. To start with, conventional loans. These are mortgage loans offered by non-government sponsored lenders. A conventional or conforming mortgage adheres to the guidelines set by Fannie Mae and Freddie Mac. There's also fixed rate mortgages. With a fixed rate mortgage, the interest rate stays the same throughout the life of the loan. Next up, you have adjustable rate mortgages, also known as ARMs. And ARMs have interest rates that can change over time. Next up, there's jumbo loans, and these are mortgages that exceed the conforming loan limits. There's also interest-only loans. These are loans where for a set period of time, the borrower pays only the interest on the principal balance, with the principal balance unchanged. And finally, we have balloon mortgages. This is a type of mortgage where the remaining balance is due as a single payment at the end of the loan term. So how do we actually qualify for a home loan? To start with, you must have good credit. A good credit score is essential for securing a home loan. You'll also need a down payment. You'll need a deposit of at least 5% of the property's value to get a mortgage. Also, lenders will look at your debt to income ratio to ensure you can afford the monthly mortgage payments. They might also check your employment history. A stable employment history is often required. If you're self-employed or you do not have regular income, you might find it harder to agree to mortgage terms. You'll also need some proof of income. You'll need to provide proof of income such as W-2s or pay stubs or tax returns if you're self-employed to prove how much you've been making. You may also need to provide your bank statements so that they can assess your financial stability. You'll also need to provide proof of other debts and assets. And finally, you might need to apply for agreement in principle. One of the key methods of checking your mortgage eligibility is to apply for an agreement in principle. By applying for an agreement in principle, a lender will ask for financial information and perform a soft credit check to let you know if you're likely to be accepted. So now that we know exactly what a home loan is, what are the main benefits? To start with, it makes owning a home possible. For many people, taking out a home loan makes a property affordable because it would take too long to save up. A mortgage allows you to spread the cost over many years. There's also flexibility and choice. There are many different types of mortgages viable, so you can often find one to suit your situation and personal preferences. And finally, there's long-term stability. Having a mortgage offers more long-term stability compared with renting. So what about the disadvantages? There's a long-term commitment. The dedication of EMIs can last 10 to 15 years, which can be a serious pain point. Home loans impose a major burden on personal finances. You'll also pay back more than you borrow. As with all loans, you'll need to pay back the capital you owe, plus interest. While interest rates can be relatively low on mortgages compared to some loans such as credit cards, you'll still be paying interest for a long time, which will add up. There could also be fees and additional costs. It's not just interest rates you need to think about with a mortgage, you also need to factor in any mortgage fees, such as arrangement fees, valuation fees, remortgaging fees if you're remortgaging, and also conveyancing fees. And finally, your home could be at risk. If you can't keep up with repayments, you could end up losing your home. So this has been my video explaining exactly how home loans work, and hopefully now that you've watched this video you have a good understanding of how they work, and you can use some of the knowledge that you learned in this video to help assist you with getting your home loan. So I hope you found this video helpful. Thanks for watching.